Hi, Akash.
Right.
Please go ahead.
Hello, everyone. Good afternoon. Let's start again with our webinar session. So, there are many technicalities inside the trading based on technical charts. We will not go into deep every time because we want to generalize the topics as much as possible so that it becomes more easy for people to understand. So, today we are going to see two things: different structures of your demand and supply areas. By structure, what I mean is that if I go to the chart straight away on any time frame,
Can you share your screen, Akash?
yeah, just a minute. There's the option. Yeah, got it. Okay, it is visible.
Yes.
Okay. How do I minimize this? Yeah, okay. So generally, what normal perception for people is that we identify the support and the resistance areas. So say if this is my resistance area, this is my support area. So generally, what we expect, price will fall from the resistance and price will take support from the support area. This is what we understand. But what generally happens, many times we see the support is broken, and many times we see the line of the resistance that we have drawn, that is broken. So we'll try to identify and understand which are the support and resistance areas which will not be broken or which will be broken. Both the sides we'll try to understand. So for these we need to understand the basic structures. Now, as the whole base of our webinar that we have been going through past 1-2 months is demand and supply. We have already discussed that suppose if this is the price level, say this is any stock from 90 to 100 rupees, this is the range for that stock. So if some big people want to buy, say some foreign investor or a domestic investor, whoever might be, they buy in very bulk orders. They have very bulk quantity to buy. So they cannot buy at market price, because the moment they start buying at market price, the price will keep rising and their average price will go up. The buying average price will go up. So they fix themselves a range that we will buy inside that range. So whenever the price comes in that range, they buy their pending orders, and then due to that huge demand, price again shoots up. Again, when the price comes back, they buy the rest of their pending orders, and again due to their demand, price shoots up, and this same thing happens until their big order is fulfilled. After that, if there is another big order, that area will still act as a support, and again due to that big order, price will rise. But after that, if there is no big order, that area is not that strong, it becomes weak and it gets broken. This is what is a summary, a recap what we have learned. So that area, that this line I am talking about, we will try to understand the structure of this line, and for that the candlesticks also we have already discussed. So the most basic structure which is available over the internet everywhere is this one that I am drawing here. This is the most basic structure. You can find it everywhere. This is nothing new technology or some new concept. It is a very general concept, but how to use that general concept, that is important. We will try to understand. So anywhere in the chart, if you see anything like this, you need to understand that this is a kind of a demand structure. There are names of these candles. We do not want to go into that much deep. Simply try to visualize this, only these three candles, three part. So why is this purple or blue? It means that it can be of any color. It can be of red also, green also, that doesn't matter to us. It can be of any color. So looking into this one, at its first instance, what can we observe? We can observe that this candle and this candle, both are very good bar candles. What is a bar candle that we discussed? A candle which has very small wicks. very small wicks compared to the body. So if I say this is my body and this is my wick, so this is not a bar candle. A bar candle is where the body is bigger than the wicks. Something like this. This is still a bar candle only. And the most ideal bar candle is a candle having no wicks. So our first observation is both of these candles are good, nice bar candles having smaller wicks. Third of the next observation is this candle is very, very small compared to this and this. If you want to quantify how much small, generally we would want that compared to our this and this candles, this should be less than 50% of the body. Not a very hard and fast rule, but generally we would want that even if you look through your naked eyes without any scale, you can understand that, okay, this candle is very small than this and this compared to both of this. What is your another observation? This green candle is bigger than the red candle. And the closing of the candle is above the red candle. So say this is one scenario. You have another scenario, something like this.
Akash, do we have any simple names for these patterns to make it as a story?
Yes, we have names. We will name that also. So actually, I did not want to go into the names, but if you have asked, then we can say. So generally, this candle is called a drop candle. Drop means the prices drop, and then this is called the base candle, and then this one is called the rally candle since the price has gone up. So in a generalized term, it is called as a drop, base, rally structure, DBR structure. If you search in the Google DBR structure, you will find in numerous examples and theories also. Drop, base, and a rally structure. And this structure signifies demand zones. Demand zone means we expect that the demand for the shares is very high in this structure, within this structure. So where it is high, that we'll see later on. First, we will try to understand the structure, what it is itself. So if I compare this structure to this one, this looks good. It's a good bar candle. This looks good. The base candle also looks good. But you see this rally candle, the price did go up compared to this area. But again, the closing was not above this red candle. So again, I will not say that this is not a structure. This is a structure, but the quality is not good. If you rate the quality, so I can say this is of a very higher quality. This is not good quality. This quality of the zone is not good. This structure's quality is not good. Now, how do we quantify quality? We will come to that also, step by step. Now, if you see something like this, there's a structure. Like this. So again, this is also a demand structure. But again, this is of the poorest quality. Because what we want is that the first condition is both these candles should be a very good, nice bar candle. There should not be wicks in both of them. Secondly, the closing of the rally candle should be always above this one. We will always want that the closing should be above this one. Two conditions we have already discussed. This one can be of any color. There is no problem in that. So say if you see something like this now, another scenario if we want to take.
All these three are DBR structures, but okay, with the different quality.
Yeah, different qualities.
Okay.
So now if we have a DBR structure, something like this. So here if you see, you have a good bar candle here. which you can call it as a drop. This is a base. Now the confusion starts to come. Whether you take this one as a base also, like consider both of these as a base and this one as your rally. This is first condition. Or you take this as a base and this one as a rally. The basic confusion. So what is the logical reason? This cannot be a rally candle because it does not have a closing above this. So instead of considering only this one as a base candle, if we consider both of this, that there are two base candles, then also the structure is very, very good. Because if this is the base candle, it is almost equal to 50% of this and this. But still I can say from my naked eyes that this is, yes, smaller, way smaller than these two candles. So even this structure is very, very good. As good as this one. There is no problem. The moment you see something like this, that's it, like this. Now the quality is compromised because we know this is only base candle and the leg out is almost equivalent. There is not significant good closing. So now this quality is compromised. So another question that will come is that how many base candles are there? How many candles can be there? So there can be innumerable candles. There can be say one candle here, another one here, something like this, and then like this. And then you can have something like this. So then also fine. We are having 4 base candles. We will count it as a 4 base candle. So how many candles are important? That is again later. Say in this structure, it is like this. Or maybe it is like this. So all these are different patterns and scenarios. We will come one by one in all the exceptional cases. What will happen if the drop goes more below than the base? We'll come to that step by step. So for now, we will focus only on this one, this part. The most basic structure for the demand area. We'll focus on this. So this is the whole structure. Inside this structure, there is a very specific zone where the demand lies. So what do you mean by demand? Demand means there are buying pending
price.
orders. Yeah, buying pending orders. Why pending orders? Because someone has placed a bulk order here, and due to that huge demand, price shot up and he was unable to buy all the orders. So his orders are waiting for there. So what is our basic understanding? Suppose someone has placed a good amount of order here. Say here he has placed 1 crore orders, 1 crore shares he wants to buy, and the price shot up. He could buy only 10 lakh. So 90 lakh he is still waiting to buy. The next time price comes again to that range, again he will buy, those orders will be fulfilled, and due to still higher demand, price will again go up. So the whole motive of understanding is that if we are able to find that area where that huge order lies, which is creating the demand, we can mark that area and wait for the next time for the price to come to that area. So say if this is my area where there are very huge orders remaining to be bought, someone wants to buy, we have identified it somehow. So we know the first time when the price will come here, I am mentioning the word first time. Always remember, first time means price came, halted, and went up. So the first time it went up, it created a demand here. So when it created a demand here in this area, there are pending orders. So for the first time when the price will come, what we assume is that due to the remaining orders, again that guy will buy and the demand will again shoot up the price. So at this point, we will ride with the tide. When the price will rise, we will also take trade here in the same direction where this big player is trying to buy. This is the whole concept, what we want to do. And actually, when you see everywhere, people talk on buy on dips. When the price is falling or it has fallen 10%, 50%, they say it is a good stock, buy on dips. So actually, they are subconsciously referring to the same concept, what we are trying to learn in a better technical way. So what happens when a stock is rising? It is a very good fundamental stock. So in a fundamental good stock, there is always a demand to buy. People what generally think, what is their normal understanding? It is a very good stock. When the price is below 10%, 20%, it is cheaper. Let's buy. So they will buy. So actually that demand has been created somewhere. It is hitting that demand area and then from there again it is rising. And that demand is created by the people's thinking, by their psychology itself. So we want to generalize whatever we know in a much specific and accurate way. That is our whole motive. So let me go back to the charts. More the chart, more we will be able to understand. So looking on a layman's, like any chart you want to say, tell me. Any stock you want specifically to discuss, tell me.
HDFC Bank.
HDFC Bank. So daily, weekly, monthly, any chart. Suppose we go to weekly randomly. I don't want this line. I will just remove this. So here, our first and foremost task will be to identify this structure. See, the topic on which we have started to discuss today, it's a very, very deep and technical topic. So to cover it in one class or even 10 class is like next to impossible. So we will try to make it as much simple and understandable possible for everyone. And it requires a huge amount of practice by yourself. No matter how many times I draw this structure myself, until unless you do that yourself on a pen and paper, you will never be able to understand that. So you guys need to practice from now on to identify the areas. So suppose this is HDFC Bank, and if I try to spot this, we try to spot this now. Let's see if we can find something. We go back. So we are in October 2018. So from 2018, if we start to find that area, if we can see something, so we see something here. If you are not able to see the candles properly, let me know. I'll like zoom it. So if I see here, I have a red candle, this red candle, and then I have a rally candle and I have bases. 3 base candles I have. But if you see this area, the quality is not good. Why the quality is not good? Because if you see our base candle, these wicks are way smaller. And what you see here, this base candle, it has already gone above my drop candle. It should have been, all these 3 candles should have been below my drop candle, which means this structure should be as beautiful as it can be. The more accurate and beautiful you can spot this area, the better you can invest and trade. You should always find reasons why to reject that area. Do not find reasons to accept it. Find reasons to reject that area. So when I was talking about the quality, let me come back to this topic again, quality. How do we quantify quality? So basically what is happening here is, let's take a bigger picture. Let me draw it. Say the price was coming down like this. So when the price was coming down, it fell. After falling, few halts. What do you mean by these halts? These halts mean this is a high selling pressure. This is a mild selling pressure. Mild one. Why mild? Because you can see the red candles are small, not that big compared to this. So who will stop this selling pressure? Someone is selling 1,000 quantity and someone is trying to buy 1,200 quantity. So obviously he will eat up all the selling quantities, right? Suppose someone is selling 1,000 quantities and someone is interested to buy only 100 quantities. So what will happen? He will buy 100 quantities, still 900 quantities are there, supply is still there, and price will fall aggressively because demand is too low, which is this scenario. Demand is too low, so the price is continuously going down. Suppose someone is selling 1,000 quantity and someone is trying to buy 600 quantity. So compared to that previous example where there was 1,000 selling quantities and only 100 buying quantities, this demand looks a bit better. So selling pressure will be there, but it will be less compared to this one. Here there will be mild selling pressure as the demand is okayish, not that much, but this one demand is very low. So this 600 one is this scenario where there are very less demand, and here very poor demand. So price fell. Some people bought here, but only few people. No big party bought here, only few people, because if big party would have bought, price would have again shot up. Again, after this small party is bought, again someone sold very aggressively, price came down. Again someone tried to buy here. So it might would have happened here that after this the price could have fell like this. Instead of this, price could have again fell like this, because we know when a stock is in a downtrend, it follows this pattern. So fell, some few people bought, created very like minimum amount of demand. Again there was a huge supply. Again there was few people who again bought. Again there could have been a big supply. But what happened here? Instead of this, we saw a rally candle. So this part itself suggests that here somewhere there was low demand. But here, since there is very high demand, that is why from here itself the price reversed and it went up. If here there was a high demand, price could have gone from here itself. Okay, this is the logical understanding what we have. So that is why the moment you see that your rally candle is something like this. Now if we check the quality, if you see that the demand is created here, the demand is always created at your base candle, because from the base itself, if here someone wants to buy 100 quantity and someone wants to sell 1,000 quantity, and take this scenario, someone wants to buy 1 crore quantity and someone is selling only 5,000 quantity. So this is the big player, this is the smaller ones. So the moment you see compare this candle and this candle, what do you observe? Price did went up, but still due to selling pressure from here, price again came down. That means, say Here still, if you compare 10,000 quantities, I'm just assuming numbers, 10,000 quantities someone wants to sell. Here can be a demand of 9,000 quantity. That's it. So almost equal, or maybe 12,000 quantity, a little bit more, but not significant. Significance means there should be a very huge gap between the selling party and the buying party, so that it eats up all the selling orders and it breaks everything and then go up. So that is why this quality is compromised. Also, if we take this example, in one discussion, it is not possible to understand everything. So you guys don't need to understand everything at one go. Even if you understand 30-40%, that is more than enough. Say if you have a candle like this, somewhat, something like this. So now, why this structure is not good? Why the quality is not good? Because one
Drop
example
is
is
not quality.
because drop is not quality. But someone can question me, right? That it is good only, right? The opponent is weak. Here the opponent was strong, but here the opponent is weak. So this should be much better for us. Someone can question me. But you have to understand one more logic, very simple logic. Suppose India has won against Nepal and India has won against Pakistan or Australia. Obviously, people will say that winning against Nepal is easy. It's a weaker team. So what is the point of winning if you have a weak opponent? How can you say that, okay, I am very strong when you beat a strong opponent? So that is why even if we are strong, we need a strong opponent. And then we can say, yes, we have beaten them and now we are in charge. This is the most simple logic that you guys need to understand. That is why in our structure, we have to have a good bar candle in both this, and then we have to beat them. We have to beat them, and the base candles has to be small. One more concept we had discussed very in details. Remember, I had explained that suppose a price is in a range for many time, and suppose a price has left the area very quickly, what will be the significance of that? We had discussed that also. So suppose, I am recapping it in 1 minute. Someone wants to buy 1 crore shares in this range. Price is hovering in this range for say 5 days. So more the price hovers in one range, more the chances are that slowly he will buy his 1 crore shares. Because obviously, if time is very big, someone will eventually come and sell in this range, and he will eventually keep buying 10,000 shares, 5,000 shares, he will keep buying. But the moment he wants to buy 1 crore in this range, and within 1 or 2 days or maybe 1 hour, within 1 hour price goes up from here. So he could not have that opportunity to accumulate many shares. And the simple logic was, if this is happening, that means big players are not here, because big players create more demand and automatically price will go up. So this is the logic where I am returning now to our structure. If this is my structure, and say we have so many base candles, we have so many base candles, and then we have a rally candle. This is one. And then we have another structure where we have 1 or 2 base candles, and then we have a rally. like this. So in both of these structures, obviously here there will be less pending orders. Someone wants to buy at this area 1 CR, he can buy more because it has spent more time. But if someone wants to buy here, there will be more pending orders as the price left the area very quickly. That is why these base candles, the minimum base candles, the more pending orders, and that zone becomes more favorable to trade for us. So what we see in chart is that what normal people see, what people generally see. If you see here, price has been in this area, this is a support. So people will think this as a support also, and price was here also, this is also a support. But now you can differentiate that here there will be less pending orders and here there will be more pending orders. So why this area broke, that is again a different story. We are now just trying to understand what we have just discussed.
That's COVID.
Yes, that is COVID period. But that is not an excuse. We cannot say COVID period is there, that is why it broke. Since we are talking about technicals, we need to have a technical, logical explanation that why that zone broke, that area. We'll come to that. So, okay, I need some few more supports here so that we can discuss more. Okay, we'll come to this again because we need to search for that. Just a minute. Yeah. So ideally, generally, the lesser the base candle, the better it is. So what will happen if there is no base candle? Say there is no base candle. Something happens like this. Then what? So generally, when we are trying to understand these structures, we avoid this kind of structures generally. But later on, what understanding is that this area, we generally consider this area itself as the zone if there is no base candle. But that comes very, very later on. For now, if you see something like this, try to avoid it. Always stick to the structure for this practice purpose and understanding purpose. If we move on from here, yeah, now let's get back to again HDFC Bank. Where were we? So we will discuss the current scenario itself here. So here, if you try to find our structure, this drop, base and rally, let us see where we can find something. So here, if you see, let me zoom it a bit more. Here you see a drop. So now either you can consider this as a rally or this as a rally, but again, this one cannot be a rally because the closing is not above this. So if we consider this one as a rally candle, we have to consider all these as base candles. So what is the issue with the base candle? Only issue is this one. Because what we had discussed, the base candle should be smaller compared to the other two bar candles. So it is smaller only. If I try to measure it, if I try to measure this and this is smaller. Even if it is not less than 50%, it is smaller. Smaller than this also. So we can say this is a structure. This is a D, this is your B, and this is your R. Structure is there, but the quality is not that good. The moment you see, the beauty of this structure is distorted. So how the beauty of this structure is distorted? Number one, it is wasted due to this candle. This is equivalent to this one. Almost. If this was a little bit smaller, then this would have been very nice. So we can consider, okay, for the moment, even if it is a bad structure, we will consider it. So what happened? price came to this structure, and from here it reacted. But after reaction, what happened? Again, price came down. It could not go very high. The only reason was it did not go very high was since this was not a very good structure. So pending orders were less. The moment the quality is low, the pending orders is low there. You have to understand. So since the pending order is low, it had only that much power to push it till this much. After that, the power finished, and then it again came down. After coming, it again took something from here, but eventually it failed and it broke. If we try to something more, if we try to find something more in HDFC Bank, the same structure, drop, base and rally. Let's see if we can spot something. See if you can see something here. You have a good rally candle. You have so many base candles and you have a drop candle. But if you see this drop candle, do you think this is a good candle? Does it qualify to be a good drop candle? It is not even a bar. The wick is equivalent to this body. So this is a structure, but a very poor one. You cannot expect a good reaction. What is the reaction? What is the meaning of reaction? You cannot expect that price will come to this zone and react very, very high. Pending orders are less. If you see
So
here,
if we switch to daily, I think we'll get more candles too.
yes, you will find this structure in every time frame. Daily, 3 minute, 5 minute, 15 minute, every time frame, you will find this structure. So later on, we will combine higher time frames and lower time frames together to understand that, okay, even if my structure is okay, will it break or not? We'll combine it. If we go to daily and try to find that same thing, see something here is there. This one. We have a good drop, very nice drop. We have a base and we have a rally. But you see, this rally candle is nowhere good. It is good for nothing, this rally candle. So even if this is a poor structure, this is not a good structure. Let us try to spot something good. If we consider this one as a drop, okay, remember drop means red. A drop candle cannot be a green candle, and a rally candle cannot be a red candle. So suppose if this is a red candle here, suppose this structure, suppose this is formed and the next day it opens 10% gap up, and then there is a red candle after opening gap up. This is a red candle. This is not a structure. It has to be green, it has to be red. Strictly, there is no exceptions. Base candle can be anything. See here, if you take this as a drop, this as a rally, rally is good. Closing is above the drop. It is also a bar. This is your base candle. So this base candle, okay, so your base candle can have a big wick. The wick of your base candle can be big, no problem. It can be big, like this also. Towards the upside, ideally it should not go above your drop candle. The wick should not go above the drop candle, ideally. Towards below, that is fine. So if we have a structure like this, say we have a green candle here as a base. It has a wick like this. And then we have another candle which is say red, and it has a wick like this. And then we have a rally candle like this. So it is fine. Your rally candle is good. Rally candle is a bar candle. Closing is above this. This candle is also okay. And your base candle's wicks are still below the drop candle. The moment this becomes now, the quality is compromised. We do not want this. If it goes like this below, it is fine, no problem. Towards the downside, it is okay. Again, what is the logic? We'll come to that. Everything has a logic. So here, if we see, if we consider this one as a drop and this one as a rally, we have so many base candles. All base candles are small. But the first and foremost thing is this rally candle does not have a closing above this. There is no closing above this. But we were talking about this one. So the body part is less than the bar candles, somewhat. Still, if I ask that, do you think this looks very, very good? So very, very good, this does not look. If this candle was a bit more small, then it would have been very, very good. This is a structure average, or you can say okayish. So that is why it did react. This was my base candle. Price did come here, and from this area it did react, but not that much. Again, it came down. So the moment quality is less, the reaction will also be less. So how will we trade? How will we trade? Suppose this is the current price of HDFC Bank. This is the current price. Here it is. And we know below this, there is a zone, drop, base, and a rally. So we know in the base candle, there can be pending orders. This area, there can be pending orders. So now we will wait for the price to come into this zone. The moment it comes in this zone, now we are going to buy. Take your entry. And where will be your stop loss? Just below the zone. Why below the zone? Because we know if this zone is good, then price will react from here and go up. It should not break the zone. That is a stop loss below the zone. Now, there is a concept of marking the zone. How you mark the zone, that we will come later. How to mark the zone. First, we will understand in general language. So what will happen? If this is my zone, let me mark it. Suppose I mark the whole base candle. I am marking the whole base candle. And now the price came to the zone. So the moment it touched your zone, you will take entry here itself. In the red candle itself, you will take entry. And you will keep your stop loss here. So the price came, from here it started to react. And then it came deeper, and then it went up. So we generally keep 1:2 targets. If your stop loss is 1 rupees, you generally keep twice the target. Generally we keep for the moment, whatever it is. So this is how we will take entries. We will come to entries later on. I just showed an example. For now, we will try to spot our zones. Let's see if we can find something more. Drop, base, and a rally. See here, there is a drop, a rally. We have a drop, a rally. But you see the base candles, it has already gone above this. So this is a poor one. A zone, but a poor one. This one we discussed, this one we discussed. So as of now, could not see any very, very good, nice zone, a very good, beautiful one. Couldn't see. Let's go back, let's go back. Nothing here in daily, nothing good we can see. Let me see in monthly. So we should not forcibly draw any zones. If we are unable to find that zone, we'll just simply skip it. We'll try to see something else. In monthly, if I try to spot something, cannot see, cannot see, cannot see. Only I'm seeing is that zones are getting broken here. So this was the COVID period, this one. What happened? There was a drop, there was a base, and there was a rally. But this rally did not have a good closing. And that is why when it came to this area, it could not hold up. It got broke. So if I did not know anything about COVID, that this was the COVID period, what would have been my assumption? My assumption will be simply that this zone was not that good quality. That is why this area could not held up. It broke. And it is not because it is in the chart, so I am relating it and telling you. You can go and backtest that. So in HDFC Bank, cannot see something that much beautiful. Let me try to see something in some other stocks. Which one? Any other stock you want? Tell me.
Bank Nifty will try once.
Which one?
Actually, Bank Nifty, for 44,100.
Bank Nifty, that 44,100. You are talking about strike price.
Yes.
So
Just
see,
we can see the something.
so see, for strike prices we cannot do anything. Strike prices, that are premium strike prices. We
Okay.
can analyze the charts, but
Mhm.
for the strike prices, that is totally different calculation.
Okay.
What is your, so this is Bank Nifty 1-day chart. If I can see, let me see from weekly. If I see something in weekly, so you see in weekly what we see here, we see a drop, we see 3 base candles and a rally candle. Rally candle is not that much strong, and if I take this one as a rally, all these as a base candle, then this base goes above this. So we can say that, so we can say structure is there, but it is not that very top high quality. Okay,
Yes,
Ishwan.
yes.
In weekly, in monthly, what I see in monthly, as of now, I cannot see anything. If I go to daily and try to spot something, so okay, one thing I want to clarify: the structure that we have learned right now, this one, there is one more structure apart from this. So both of them cannot be discussed at once. There is one structure like this also, which we will do in the next webinar. This one, there is one structure like this also. This is called a rally base and a rally. Here there was a drop base and a rally. Here there is rally base and a rally. So in these kind of structures, your pending orders are in these base candles, not below or not above. Here is this one, your pending orders, but we will not discuss that right now. So based on that, here itself there was a zone, a rally, base and a rally, this part, and this is already gone, already finished. Okay, nothing as such, cannot see any good zone as of now here. Don't think it will hold on much. Let's see weekly. Weekly, somewhat okayish. What about in 125 minutes? Nothing good. 75 minutes. So as of now, I can't see Bank Nifty like going upwards anywhere. Doesn't look good to me. So you are talking about which strike price? 44?
44,100.
44,100, right? So 44,100 strike price is 44,100. So which one? You're looking in the long side or the short side? PE or CE?
CE.
So if you want to
No,
buy,
because yesterday it happened. Means some observation I was just doing that. 44,100 CE. Like it is like V shape. So only I was so that we can relate our pattern here. That is what I was thinking.
yeah, I get you. So you can look into the premium charts also, but it is better to always analyze or refer the underlying chart, the main stock or the index chart, because
Okay.
in your premium value, there is your time value also there, plus your intrinsic value is also there, plus your implied volatility is also there. So it might
that
happen
much
sometimes.
I'm not aware.
Yeah.
Okay.
So say if someone is of age 30 years, if he wants to buy a mediclaim, he has to pay certain amount of premium. And if someone is of 58 years and he wants to buy a mediclaim, so either he will not be eligible for a mediclaim itself, or maybe the premium will be very high, because the insurance company knows that this guy has a more higher chance of getting ill compared to this in general. Suppose if there is someone who is of 25 years age and someone is of 60 years age, if you go to buy a life insurance, premium will be less for this guy and more for this guy, or even this guy can't even get a insurance. That is also possible. So the same thing happens in your options also. The premiums have certain time values, some intrinsic values, some movement values also, some volatility values also. So it might happen along with the chart, premium will not react the same. Many times you will see the trade is going in your favor, but the premium is not rising. It is there only because there are many calculations inside that.
Okay, fine.
So as of now, Bank Nifty overall doesn't look that good to me. It will look only good above 44568. 44568. Let me mark that area. 4456. Yeah, this one. If it goes above this, then only maybe you can see something good upside. Else, CE side, I can't see anything good for now. One more thing, maybe next week, maybe Monday or Tuesday itself, you will see a very big candle. One very big candle is pending next week. Very big candle. And mostly, I think towards the lower side, a big candle is pending, because market characteristics is, you will always see after a big candle, it makes very small candles, and then again it gets ready for a bigger one. So if you see, this is my daily chart. All these candles are 1, 2, 3, 4, 5. This is 5 candles almost, you can say, small candles. So now it is high time. The next week you can expect a very big candle on any side, upside or downside. So if I go to my weekly, I can see a downside candle itself. Not 100% confirmation, but 95%, 90% I can see is that the next week Bank Nifty can make something like this.
Okay.
Let's see what happens mostly. So as of now, the chart is following a first part, second part, third part. Again this. So now it is here. So that is why I marked this line. If Monday, if there is a gap down of 100, 200 rupees, see the conditions, how we analyze. Say 100 rupees gap down in Bank Nifty, a little upside, and then the first candle itself red. I mean the first 15 minute candle is like this. After the gap down, then 90% confirmation, you will see a big red candle on Monday itself. A big red candle that will eat up all these 3 candles at once. A very high probability is there, because at this side I cannot see a good demand zone. Here there was a demand zone, it tried to hold it, but cannot see something. We'll see what happens.
Fine, Mangesh. Yeah, thank you.
So I would suggest, if you are trading in options, try taking only fewer lots, 1 lot, not more than 1 lot for practice, or if possible totally avoid that.
Yes.
For now.
Okay. Yeah.
Okay, so we have 2 minutes left. Let me go to some few more of the charts.
Akash, I was trying to find some zone to show people. So can you go
Yeah,
to
please.
Vedanta,
Yeah, sure.
26th December 2016.
So on which? Daily, monthly, weekly?
Weekly.
Which one?
Weekly. 26th December 2016.
2016?
Yeah.
2016. This one?
Yeah, that zone.
Looks good.
So can mark it probably.
Yeah, so here if you see, we have a drop, we have a base, single base, and a rally candle. So there is one confusion here. Only confusion is that if you consider this one as a drop, then why can't you consider this one also as a drop? And if you consider this one as a drop, then your base size is almost equal to this. So okay, so that is why we will not consider this one. We'll take this one, and this. Looks good. Okay. Few more.
So
from
you
here,
can say the rally as well. So the next time it hit, it rallied.
Yeah. So if this was our zone, price came to this area, and then from here it reacted. Any more zones? We have here also. This one broke. A drop, 2 bases, and a rally. and price came to this area and then it broke. So why it broke, that is again later on. There are more factors to it. This one is good. One of them is here. I will tell you. I was going through this. So this one, this Petronet is still in our radar. It is still good only. Let me go to the recent one here. So I am at weekly W. In weekly, if you see, picture perfect zone is there. If you guys want for practice, you can trade in small quantities also. You see a good nice drop. You see two base candles and a very nice rally candle. So the moment the price comes in this area, say 223 to 215, or roughly area this 7 rupees. The moment it touches 223, you can trade on small quantity and try just to see what is happening. This one looks very good. This area. Just watch it. Just watch Petronet and see how it is reacting after coming to that area. In our last webinar, I was talking about few stocks for future testing also. That let's see what happens to it. Can anyone tell me? I don't exactly remember which stocks we were talking about.
Yeah, Akash, not related to this one. I have a curious question. Is
Yeah,
there any software or application that analyze candlesticks? Means like right now I can see, okay, with the human intelligence only we can understand this one.
So for that candlesticks analysis, that we have to do our own, because there are innumerable ways of interpreting any candle. So my perspective can be that this green candle is a bar one, and your perspective can be this is not a bar one because it has a big wick, and someone can come and say some other perspective. So the area where there are innumerable possibilities, at that time that software cannot do anything, because he will give you results only based on the input that has been provided to it, and that at that moment it will become like, I don't think that is useful. So all the algo traders there, so I don't think any algo trader can make that much money what manual traders can do.
Yeah.
Okay.
As we discussed, Akash, there is one website, Brahmer. It is called ChartLink, CHARTLINK. There you can put some triggers. For example, the previous close was above this, above less than this. The previous to this candle, 2 candles before this is like this, like that. We can set some rules, basically.
Yeah.
That much we can do. But yeah, the more you can practice and probably make it picture perfect for that.
My point
I
is,
don't know.
my point is like, if you see, there is a quality stocks also. There are 100 quality stocks are there. Each and every chart we cannot analyze. Okay, we have, if that is able to give some 10 charts that we can further analyze. Like this, I am trying to see something.
No, we have to analyze each and every chart. If it is possible, you have to analyze 500 charts. Suppose every day you are analyzing 3 charts. For analyzing one chart, I think 10 to 15 minutes is enough. After understanding everything, like we are discussing, what are the rules and regulations, what is the way to analyze the chart. Once you learn this, in 10 to 15 minutes, you will be able to analyze 3 charts every day. So if you do this task for 1 month, say if you analyze for 20 days also, you are capturing 60 stocks. That is more than enough.
Okay, got it.
Until and unless you make your hands dirty with the chart, there is no way you can earn money from the market. It's only by a fluke you can do that. Suppose you like put your bet on some stock and it worked. That is the only way.
So always manual analysis is better than algo analysis.
Yes, always manual analysis is better. Always. So see, very simple understanding is there. Suppose whatever we have discussed here. So suppose the price has fallen from this area. Say this is an area of 280 rupees to 260 rupees of any stock. Price fell. Why did it fall? Because there was a high selling pressure. So what happens in a high selling pressure or a buying pressure? Price goes down or up very aggressively and pending orders are left because a big party is selling. Suppose someone sold here 50 lakhs of shares. The next time price will go here, again that huge supply will push the price down. Again the price, when it goes there, again it will try to push it down until and unless it will keep pushing down till all these huge pending orders of this selling type is fulfilled. So once it is fulfilled, the next time it goes here, you know there is nothing big to stop it. It will break free. The moment a huge demand is generated here near the selling area, it will break free because the huge pending orders are not there. Now if you see the same thing here, I am near this stock Petronet LNG. If you start analyzing from this point, from 2019, price fell from here, there could have been pending orders here. Next time price went up, it would have taken a few chunk of pending orders away. Again price came down, again price went up to the same area. So many times price has already come to this area that if suppose in this whole area here, if there was 1 CR of selling shares, here it would have become 80 lakh, here it would have become 60 lakh, here it would have become only 10 lakh or 15 lakh. As every time it is coming to that supply area, it is taking away some pending orders. So now if the moment you see that this is a drop candle, here one base candle is formed and a rally candle is formed here in the vicinity of this area, you can simply say by common sense is that this area has been tested so many times that there are no or almost negligible selling orders, and immediately here there is a strong demand zone. That means fresh demand is generated. So it is high time stock will break through. So you have to sit with the charts and you have to analyze and you have to discuss it with your peers also. Suppose you are analyzing any chart, please feel free to ping me, Karthik ji, or any of your colleague with whom you discuss about stock market and charts, and try to put forward your views that according to me these are my reasons, what do you say? And then you see what is his idea. Effort has to be given, else it is very hard to make efficient and good decisions. So for today, what was our discussion based on? What are the structures, the demand structures? We have discussed only one demand structure: drop, bases, and rally. What are the rules? Not the rules. What are the characteristics of the structure? These bar candles, base candles. What should be there in the structure? What should not be there in the structure? We have discussed only one. There are total 4 structures. We have discussed only one. And why these are important? Why the pending orders in the base candle only? Why nowhere else? That also we discussed. What are the reason? Why base candle should be less? That also we discussed. And we tried to spot this structure in our charts. Just as a warm up, we tried to see, can we find something? So here we found something. I found a drop, I found a base, and I found a rally. But this is not a good structure because this rally does not have a closing above this. So bits and pieces we will try to understand things by spotting it. So Karthik ji, you can do one thing. If this has become a closed group, then why not give them few warm up tasks or homeworks to do in the weekend or throughout the week, so that they can have a better understanding.
Sure, Akash.
So I have few questions. The base candle is almost more than 50. Can we consider it as a base? Generally, we should not. Even if we are considering, we cannot expect a very good reaction since the beauty is lost. We need a beautiful structure. If promoter shareholding drops to 0, what is the indication? Good or bad? So ideally, it should not be good. Suppose you are the promoter of any company, you hold the major of the stocks, and you are yourself selling the stocks. That means you yourself don't have confidence in your company. That means there is something fishy, that is wrong with the company. So that is not a good indication. if the promoter shareholding holdings drops to 0. And generally this happens with all the penny stocks, the 1 rupee, 10 rupee, 5 rupee stocks. This happens. So guys, any doubts you are having? Please feel free to ask your doubts.
Nowadays, actually, Suzlon is coming so many places. I'm listening that.
Guys, can you hold on for just 1 second? Just 1 second. Hello.
Hello everyone.